welcome to today's explainer. I really want you to treat this like a one-on-one mentoring session. Look, if you're a college student or a young adult right now, the whole financial world probably seems completely intimidating, right? You likely think building wealth is strictly reserved for people with fancy finance degrees or giant trust funds. Well, today we are completely dismantling that idea. We're going to map out the ultimate blueprint for your wealth journey, and we're going to do it using just one single, crisp $100 bill. By the end of this, you're going to know exactly what beginners get wrong and how you can totally change your financial future.
So I know it feels like you need thousands of dollars to even start investing. But the absolute biggest misconception that keeps young adults totally paralyzed is just simple fear. You're probably thinking, what if I make a bad choice and lose my money? And that fear, it creates a massive psychological block. It tricks you into waiting around for some imaginary worthy safety net before you even dip a toe in the water. But think about this for a second. What if losing a few bucks early on is practically irrelevant? What if the real danger isn't making a bad investment at all?
Because honestly, the absolute biggest investing mistake you can make is never starting at all. Waiting around for more money or waiting for the so-called perfect time is a highly dangerous financial myth. People do this all the time. They wait until graduation, and then they wait for that first promotion, and then it's waiting until they buy their first house. And while they're waiting, they're missing out on the one single thing they can never, ever get back. Starting with just $100 completely shatters this curse. It gets you off the sidelines and actually onto the playing field.
Let's picture this in action with two friends. We'll call them Alex and Ben. Now, Alex just goes for it. He invests $100 today. Ben, on the other hand, falls right into that trap we just talked about. He says, you know what? I'll wait until I have more money. $100 just isn't worth it. So years pass. Ben is perpetually waiting for the perfect salary and the perfect market conditions. Meanwhile, Alex just keeps putting in small amounts, gaining real-world experience. When Ben finally decides to get going 5 years later, Alex has already acquired something Ben simply cannot buy, and that's time.
And when you track how compound interest plays out over the years, the momentum is absolutely wild, purely because Alex got that head start. Time is literally the most valuable asset in investing. In year one, the growth feels tiny. Honestly, it might even feel a bit discouraging. But fast forward to year 5, and you see that momentum really building. By year 10, it is surging upward. This is compound interest doing its thing. It's your money making money. Because Ben waited, he completely missed out on the foundational years of that growth. Alex's small early start mathematically crushes Ben's delayed start. No contest.
And this is exactly why building financial wealth is just like sticking to a consistent gym routine. Think about it. If you go and lift weights for 9 hours straight on a Saturday, you are definitely not waking up ripped on Sunday. You're just going to be incredibly sore. Fitness comes from putting in the work for 45 minutes 3 times a week, month after month. Investing is identical. The people who actually build wealth aren't necessarily the smartest, and they aren't always the richest. They are simply the people who stay consistent the longest. A tiny amount invested regularly is almost always going to outperform a massive amount invested just once.
Okay, so you might be wondering, where on earth should a beginner actually put that first $100? Because logging into an investing app can feel like staring directly into the matrix, with thousands of confusing options flying at you. To keep you from getting totally overwhelmed, we are going to focus on 3 highly effective, super accessible ways to put that first $100 to work.
First up, let's demystify index funds. This is just a fantastic way to safely spread out your early investments. Instead of trying to guess which tech startup is going to be the next massive winner and risking all your hard-earned cash on one single company, an index fund basically spreads your money across the entire market. So if one company has a completely terrible year, it's totally fine because you own tiny pieces of hundreds of other successful businesses that balance it right out. It completely removes the stress of needing to be some kind of stock-picking genius.
Next up, we have the ultimate secret cheat code for overcoming that fear of starting small, and that is fractional shares. Look, you might see a famous big-name company trading at $400 a share and you only have your $100. In the old days, you were just out of luck. But today, fractional shares literally let you buy a slice of that company. You could invest just $10 into a $400 stock. It completely shatters the barrier to entry. Your pocket change can literally buy into the biggest, most powerful companies in the world. How cool is that?
And finally, before you spend another hour doom scrolling your social media feeds, please remember that spending time learning how money actually works is arguably your most crucial early investment. Taking just a small portion of that first $100 to grab a foundational finance book or maybe a beginner course is going to yield incredible returns. Because guess what? Knowledge compounds exactly like money does. A single powerful insight from a $20 book can easily be worth thousands and thousands of dollars to you over your lifetime. Now, let's break down 3 really costly mistakes beginners make by comparing the frantic energy of an impulsive trader against the mindset of a patient investor. First up, their goals. Impulsive traders fall hard for get-rich-fast schemes, while patient investors know that true wealth is a slow, steady process. Second is funding. Impulsive traders actually gamble money they're going to need for next week's bills. Guys, never do this. Patient investors only ever use their extra cash. And third, reacting to market drops. When prices inevitably take a dip, the impulsive trader totally panics and sells at a huge loss. The patient investor? They just stay completely calm. You have got to realize that patience is always going to outperform quick, flashy market wins. Taking an imperfect first step today is infinitely better than staying frozen on the sidelines. Honestly, the real difference between wealthy investors and everyone else isn't some superhuman raw intelligence, it's just action. One group is perpetually waiting for the stars to perfectly align. The other group, they just start. They get in there, they learn, they adapt, and they let time do all the heavy lifting. Listen, your first $100 is definitely not going to make you an overnight millionaire, but it brilliantly neutralizes your fear by helping you simply create the habit. It's all about shifting your personal identity from someone who just spends to someone who invests. Once that first $100 is actually out there working for you, the mystery is gone. You've proven to yourself that the sky doesn't fall when you buy an index fund. And I promise you, that psychological shift is worth far more than the cash itself.
So I'm going to leave you with this final provocative thought. When it comes to the future value of your own time, will you choose to be Alex or will you choose to be Ben? If you've been sitting around waiting for the perfect moment to begin your wealth journey, I'm telling you, today is exactly that moment. Years from now, when you look back at today, you will absolutely be one of 2 things. You'll be incredibly glad you started, or you will be deeply wishing you had. The choice is completely yours. Thanks so much for joining me for this explainer. Keep learning, keep growing, and I'll see you in the next one.